Greg gave us his owner's equivalent rent definition, and I'm kind of shocked to say he was right.
He was right.
He was right.
Some would say close enough.
Close enough. Why don't you go ahead and break down the official response?
Yeah, so according to the fabulous ChatGPT, owner's equivalent rent is the measure used to estimate rental value of a property that an owner-occupier might receive if they were renting out their home.
So it's perceived by the homeowner.
Right. So one thing to note here is it's calculated based on surveys where homeowners estimate how much they would rent their home for.
And
so they are not real estate professionals. They're not some sort of appraisal. They're no sort of expert. This is a wild number grabbed out of the air by a homeowner that thinks they know what it is. And you could, I mean, if you do some research, yes, I'm just saying.
But this is sounding more like they're calling a random 1,000 people and, ask them, hey, if you were to rent your house, what do you think you could get for it?
And they look on their estimates or whatever.
Right. And we've all been doing this for a little while now. I think we've all encountered situations where homes can be a little overpriced based off of certain people's interpretations, right? You live in your home, you love everything about it.
I mean, nobody thinks their own kid is ugly. Am I right?
Oh, there you go. That's a good way to put it. And we're just we'll leave it with that. But I did want to share one more Powell question and response here, because there was a follow-up from Katerina Saravia. And it said, some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood of that, and how would you react to that? So that's a pretty straightforward question. What's the likelihood of that, and how would you react to it? Well, I think we in the real estate industry know that's what's going to happen, right? It's inevitably going to force some of those, or not force, open up the idea of somebody with like a 4% interest rate who can maybe now go to 5.5%, 5.25%, to go ahead and sell.
Right.
Well, we've got pent-up buyer demand, and we've got a lack of inventory. Connecticut's still got the lowest inventory in the country. So, if more houses start coming on the market, it's going to drive up prices because there's a lot of people waiting for more houses to come on the market. But he skated around the question by saying the housing market, it's a hard game to get that out. That was his initial quote. It's in part frozen because of the lock-in with low rates. People don't want to sell their home because they have a very low mortgage, and it would be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases.
72% of the time.
72% of the time. So it's not obvious how much additional demand that would make. Well, if you're selling your house, you got to go somewhere, and somebody's got to buy your house. Pent-up buyer demand, 2.2 months of supply, strong seller's market. I mean,
interest
pretty
going,
cut and dry. I don't know.
Interest rates going down.
Interest rates going down.
Demand's going to go
People
up.
have more buying power. Really nice house comes on the market. I mean, I think it's pretty clear. I think
it's inevitable.
Yeah. Money's cheaper. More people are going to want
it. He goes on to say the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all aspects of housing and more difficult. And where are we going to get the supply? Lower interest rates, right? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's 5 normalized in 2 sentences. That's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by the government. Wow.
Yeah. Well, I mean, we need the supply, and we need more homes built, which is not happening.
Well, what they're building is apartment buildings and condos.
Right. Or luxury homes.
Or luxury homes.
3,000 square foot luxury homes for $1 million.
Yeah. $300 a square foot. Yeah. So $900,000 to $1 million. But I like it's got to normalize. It's got to normalize, and that's going to have to be handled by the housing market and the government. Like, how is the government going to make people sell their homes?
Well, they could. They could force you out.
Yeah.
Eminent domain, isn't that a thing?
Incentivize,
that's when they seize your property.
They can seize control of your property.
And I think they still have to pay you market value.
They still have to pay you market value, right? They can't just take it away from you and say, hey, we're going to give you 50 cents on the dollar.
You never know.
I think that would cause a pretty big disruption.
Skelly brought up a good point. last show of actually incentivizing sellers. We're doing a lot of incentivizing for buyers.
Yep.
Do some for sellers.
Yeah. Hey, like we're going to give you, we're going to lower the conveyance tax by 0.5% to like if you sell, in the next year or something like that.
You think that's big enough to make what's conveyance tax depending on where
it's
you live in
1%.
Connecticut? It's like 1 to 1.25, I think, depending on some of the towns.
$2-3 depending on the
so
price
it's half a percent on.
So maybe it's you waive the conveyance tax if you sell in the next 12 months.
Yeah.
I mean, the state's not going to do that because the state needs revenue, right? We have a very high budget for our state employees.
Well, what about just some sort of big tax credit? Something maybe even a little better to incentivize. Hey, listen,
or something with the capital gains.
Something else.
That's another good place they might be able to do.
Capital gains they've done a lot with.
But that's actually Kelly did bring that up. So that's a good point because for one person it's $250,000, but if you're a husband and wife, it's $500,000.
And I know at one point during COVID they changed it so that actually for the individual it was $500,000, then for couples it was $1 million. And I thought I saw something last year that they were actually going to go back to that again.
Really?
Okay, they haven't yet because we broke it down with Scaleo. Is that probably
maybe
3-4
it was just
weeks
something
ago?
they were talking about, like a hypothetical.
Yeah, hypothetical. Okay. And let's be real, like nothing's going to happen for at least the next 7 weeks. Right. Until after the first week in November.
Yeah.
Right? Like all this stuff we're talking about now is basically just going to go on the back burner. You're going to turn it down to simmer, right?
Mm-hmm.
Now it's time. It's like when you're making like a big bat of chili, right? You got to do all the prep work, get everything going, get it all mixed up. It's like, all right, now you got to go cook for the next 7 weeks.
Yeah.
Sit back there. But what could rates mean for home buyers? More inventory, lower rates, golden opportunities for home buyers coming this fall. This is a Now BAM article, and it actually is referencing the Zillow's housing market report for August 2024. So again, always lagging a month behind because we can't give you September numbers until September's over.
Exactly.
But they do offer some encouraging news for buyers, right? We just covered that. Interest rates, they cut the rates by 50 basis points or 0.5%. But we got some reactions here from Skylar Olson, Zillow's chief economist. Late summer may be an opportunity for buyers who have been watching in the wings for a monthly mortgage payment they can qualify for. Buyers have more options to choose from for two reasons. For one, it's easier to qualify for more of the homes on the market now that mortgage rates are a bit lower. Beyond that, more inventory is becoming available, enough to improve buyer negotiating power. Attractive properties in hot markets are still selling quickly, but some metros or neighborhoods within them have flipped further in favor of buyers. So they're talking about this on a national level, right? We always have to remember
exactly
we're the outlier, or New England has always been the outlier, but then
Connecticut specifically
Connecticut has been leading the charge as the state that refuses to follow suit.
Yep, we're behind everybody.
I saw an interesting chart the other day. It was a map of the entire United States with the counties outlined, and it did the year-over-year price increase or decrease. So red means you decrease year-over-year. Blue, the darker the blue, the higher the increase. Every single county in Connecticut, dark blue. As dark blue as the map could possibly get.
Yep.
So only state in America where every single county was dark blue, which is a double-digit price increase year-over-year.
Yeah, so for... nationally, home prices are up 4%. In Connecticut, that number is between 7 and 9% as the entire state. But to your point, there's 4 counties that are over 10%, 10% or higher.
Right.
Yeah. So, I mean, I'm happy about it. My home's getting
more and more value.
We
see it. Yeah.
We're seeing it. Yeah. Let's see. So what else we got here? We got some buyers, golden opportunities. We got a quote from Mr. Byron Lazine. Let's see what Byron Lazine feels about these lower interest rates. Byron went on to say, what we know right now is that we're at the lowest level in over a year and a half, and we know these things can change quickly in the environment that we're in now. But what I believe is a unique opportunity for you, consumers, and for buyers out there in particular, is to take advantage of not only this momentum in the 30-year fix that we're appreciating right now, but coupling that with the seasonality opportunity of negotiating a great deal. You have an opportunity to not follow the herd, to be Warren Buffett of the buying community. I like that.
I love that.
The Warren Buffett of the buying community. What do they call him? The Oracle of Omaha. Yeah. Greg, do you know what the average cost of a home is in the state of Connecticut? Let me down, Greg.
I do know what it is, but I don't want to take Rob's opportunity to answer this question.
Well, I got it right last time.
Hold on, let me pitch it for you. So, home values in the United States, the entire United States.
Median or average?
The typical So this is where like
Okay,
Zillow gets
well,
cute with their words. We've broken this down. The
Okay.
typical home value in the U.S. was $362,143 in August. That translates to a typical monthly mortgage payment of $1,827, assuming 20% down, blah, blah, blah. In Connecticut, what do you think the median? We're going to go, I like median rather than typical.
I like that.
Yeah.
And we're including all counties, which means Fairfield. Fairfield throws me off. I like to stick to my counties, stick to what you know. Real estate is a hyper local game.
Mm-hmm.
I'm going to blindly throw out there a number 4 to 450.
Okay.
Not bad. Not bad. So we're talking single family homes here, right? We always want to specify. $422,000 for the state of Connecticut.
I'd say that's pretty much right in between 4 to 4.
I say it was a lucky guess.
Yeah, because we measured this, months ago? And we did this, and I guess 315 was correct.
Yep.
And see how much went up?
We've just continued to go up and up and over the last
6
year.
months.
Yeah. But here's something that you always got to keep in context, right? Is that the typical mortgage payment is still up 103.8% pre-pandemic.
Mm-hmm.
103.8% pre-pandemic. Let's see. Meanwhile, homes have fallen here on a monthly basis. 37 of the largest U.S. metros with the biggest monthly declines. San Francisco, San Jose, Austin, Denver, and New Orleans. So biggest declines. Biggest increases. Number 5, Philadelphia. Number 4, Hartford. Number 3, Providence. Number 2, Buffalo. Number 2, New York. And number 1, Buffalo. We've also got home values rose in 44 of the 50 largest metros with biggest gains in number 5, San Diego. Number 4, New York. Number 3, Providence. Number 2, Hartford. And number 1, San Jose.